Hey guys, Ken Calcutt here with Cornerstone Financial Management. I wanted to give you another update. It's been quite a while since we did an update, several weeks. Here we are, it's late July, a lot going on. I thought it would be relevant to give you guys some information. So we have had a really good market this year, really going back to last October. So what I've got on the screen here, this is just the general S&P 500, what I normally put up here. And we're looking back about a year. What you can see on the screen is about a year. This low point here, this was late October 2023. And then we've had this huge rally from November to now. So we've had a really 20-25% rally in the stock market over the last 8 months, which is fantastic. A little fast. It causes us to think things might need to slow down, which we're kind of beginning to see right here. This week's been pretty rough, especially for technology. What I'm anticipating here, I would not be surprised if we see a small drop in the market third quarter. We could easily see the market drop down to one of these green lines here. Roughly 10% drop would be very normal and very healthy for the market. That is not cause for panic. It's just a normal correction in the process of a longer bull market. So I wouldn't be surprised if we see more of a dip over the next few weeks. I think that would be a good thing in the long run, and I think it's healthy. What we're watching for long-term growth, I think the unemployment rate is now very important, okay? Inflation has been a hot issue for a long time, we all know that. Inflation is down to roughly 3%, give or take, close to where the Fed wants it, but not quite. The problem is unemployment is starting to tick up. It went from 3.4 to now 4.1. That's a healthy level for unemployment. 5 is unhealthy for unemployment. So if unemployment keeps creeping up, the Fed needs to watch that, because if it gets close to 5, we're probably close to or in a recession, and the stock market's not going to like that. So what I anticipate happening, the Fed will probably start cutting rates this year to prevent unemployment from continuing to climb. If they cut rates, the stock market will probably like that, the bond market will definitely like that, and we'll see things continue to grow. So the setup, I think, is pretty good. I think the Fed's going to cut rates. I don't think it's going to be massive rate cuts. I think it'll be slow, gradual rate cuts over the next 18 months. Which is healthy. I think that could likely prevent us from going into recession, and the markets continue to be healthy. So that's what we're watching. We hope that's the way it plays out, but we certainly can't know for sure. Unemployment rate's going to be key. So here we are, it's late July. Last weekend we just had the assassination attempt on Trump. I'm not a betting person, but if I were, I would think that Biden will not be the Democratic nominee on the ticket. I say this because we do have a lot of political uncertainty that could change the markets. Now, I'm a big believer that politics generally don't affect the stock market that much, most of the time. Election years can be a little exceptional because there's a lot of change that's possible. What the market does not like is uncertainty. That will cause the market to get chaotic anytime. We have a lot of that right now. If the ticket changes, if Biden comes off the ticket and they put a new nominee up, the market will probably get a little jumpy on that because it's more uncertainty. We don't know what this new candidate might look like. Things that we're paying attention to, but not something I think you should be overly concerned with. It's going to cause a market crash or anything crazy like that. I do think it's going to cause uncertainty, which might cause more volatility here, but I think that volatility happens in a fairly narrow scope, not way down here. So just keep it in perspective. Yes, it's uncertainty. Yes, it causes volatility. But the general economic setup is still very good. So right now I feel good about things and what the setup looks like for the economy going forward over the next 12 months, 18 months. Things look good now, but we're watching inflation, we're watching unemployment rate, we're watching what the Fed does with interest rates. Those are going to be the key drivers, in my opinion, of where the markets go from here. They all look pretty good right now. I feel good about how things are positioned, but as always, we're watching. So wanted to give you that update. Hopefully that's helpful. If you have questions for us, feel free to reach out anytime. Thanks.